Welcome to the program. I'm Okbeyemi Owosheni. We start off with business news. As the country battles with constant blackout, about 250 manufacturers and academic institutions have abandoned their respective power distribution companies to generate their own electricity. The organizations, many of whom are bulk electricity users, shunned the national grid to generate reliable electricity for themselves. This is coming amid the high cost of electricity, fuel price increases, and incessant grid collapses and fine tropism. Findings from different data sources, particularly from the Nigerian Electricity Regulatory Commission, reveal that the firms have generated up to 6,500 megawatts of electricity altogether. We'll take a break now and be back with corporate stories. Welcome back. First Bank is looking to expand to at least 3 African countries in its next growth phase as financial system across the continent opens up new opportunities. The countries being targeted include Ethiopia, Angola, Cameroon, and Cote d'Ivoire. Speaking in a recent Africa report, the Deputy Managing Director of the bank, Bong, said there are a number of large economies with large banking pools that are of interest to the bank because of their financial markets are opening up. Bong asserted that there are growing opportunities and markets across the African continent, looking similar to what was seen in the early 2000s in some of the larger African markets. We'll take a break now, but when Money Matters return, we'll be discussing the Central Bank of Nigeria's loans to banks surging to a historic high of 1.2 trillion naira in the first 7 days of 2025. I'll bring you more details after this break.
Cut. All right. What's your name again? Kemi?
Yes, sir.
Good. Are you ready for us for next week?
Yes, sir.
Next.
No, sir. No.
What? Look, what we need here is one who can speak fluent English.
Give her a chance.
I need a angel to hold me. Hold me, my beautiful angel.
Cut! It is Angel, not Angel. Please, I'm done with you. Excuse us. Kemi was far better.
It's not about our rendition. It's not about our performance here. By the time she and her friends join us in our hotel rooms, you will know how far.
Can I have her phone?
She has a robust profile.
Real robust profile. I do not undercut professional ethics. It is an act of corruption. Not in my country.
Corruption not in my country. Stop corruption now.
The Central Bank of Nigeria's loans to banks surged to a historic high of 1.2 trillion naira in the first 7 days of 2025, indicating a liquidity squeeze in the sector. The 1.2 trillion naira CBN loan to banks represent the highest in 5 years and a 961.3% jump from the 114.2 billion naira reported in the first 7 days of 2021. That's according to data from the Central Bank of Nigeria. Reports attribute the rise in demand for the loans, also known as the Standing Lending Facility, to liquidity constraints, monetary policy tightening, economic challenges, and regulatory pressures. But it also shows the extent of naira depreciation over the period. The naira has depreciated by over 74%, with the loans jumping more than 10 times over the period. Now, let's discuss this further. Economist Mohammed now joins me on the program. Thank you for joining me on the program, Mr. Mohammed. Now, the Central Bank of Nigeria's loans to bank has surged to a historic high of 1.2 trillion naira in the first 7 days of 2025, indicating a liquidity squeeze in the sector. Now, what does this historic surge in CBN loans to banks indicate about the liquidity situation in the Nigerian banking sector?
Well, I don't think there's cause for alarm. If you look at it, even your report, some of those liquidity squeezes as a result of the standing lending borrowing they did to some of most of their major clients that are importing a lot of. We are an import-driven economy, so I don't think there's cause for alarm. And when you look at those liquidity squeeze that you're looking at, you know that some of these facilities were being given by the tier two banks. If you look at the tier one bank, they are still awash with a lot of liquidity. And that is why the CBN is saying that a lot of these banks should recapitalize. And so that will help us from having issues like this. But I don't think it's cause for alarm. Like I keep saying, the most vibrant sector of the Nigeria economy is the informal sector, and it's largely driven by cash. So you see what we always say, that when you start that sector of cash, then you begin to see the kind of problem that you are seeing. Take advantage of that sector, which is very vibrant for the Nigerian economy. So there's no cause for alarm. It doesn't mean that if you are saying that the non-performing loans have gotten to that height, then we'll be afraid. But if it's about liquidity squeeze, and this is due to the lending to most of their major customers for the importation of goods, and they have the standing orders, maybe they've had it in December, and so running into January, so I don't think there's any cause for alarm on that.
Now, what you've mentioned that there is no cause for alarm, but then what would you say are the main factors contributing to the sharp rise in the use of the standing lending facility by commercial banks in Nigeria?
Well, again, it's all could boil down to lack of liquidity and the type of lending that they are doing. Because again, when you look at the central bank, keep telling us that all Nigerian banks are liquid. And like I said, the central bank did not give us the name of the banks that are involved in this thing, but this type of liquidity squeeze. But I can assure you that it more or less must be the tier two banks, those banks that are really not highly capitalized. For the highly capitalized bank, for the tier one banks, they are watched with a lot of liquidity. And then the positivity about that is if this lending are being given to the real sector, and that will also have a snowball effect on the economy, which will cause for celebration. So I don't think the effect is for the CBN to be able to come in and street that gap. It's a short time measure. There are times that the lending from the CBN to the bank at a point was almost zero. So I keep saying it, that when you look at the tier one bank, tier two banks, when you look at based on the earnings season that they have given thus far, I think they have a lot of liquidity. This might be happening to some of the tier two banks and tier three banks that are trying to, maybe national banks, those banks that have national reach. For those that have international reach, are mostly the tier one banks and some part of tier two bank. I don't think this is a challenge. So it's not so much a big thing, but again, the CBN need to look into those banks that are having issues in terms of liquidity, and that's why they must recapitalize so that they can have a lot of liquidity in the system. Because what it means is that most of what they have, they are lending it out, and so they are minor customers, those that come into day-to-day activities, will have to be starved of funds, so they have to lend from the CBN to be able to meet those minor customer needs, and it also determine the time duration that those the standing loaning customers will start paying those loans. So those borrowing can go in for a while until this standing facility will begin to pay off whatever they've collected from the bank. And I don't think that's good for the bank, and that's why we must commend the CBN for saying that they need to recapitalize so that they'll be able to handle high ticketing business like this.
So now, even though you've mentioned that this is not a big deal and it is not a challenge, but then how sustainable do you think this level of borrowing from the CBN is in the long term? Do you think this can lead to any systemic risk in the banking sector?
If you look at banks that were acquired by CBN, was as a result of their constant coming to the CBN for aid in terms of liquidity. If you look what CBN mentioned, that why they will have to withdraw licenses from Heritage Bank, they said it was their continuous use of the liquidity window of the Central Bank of Nigeria, which is not good for any bank. What it means is that they don't even have cash, so they have to continue to borrow from CBN. So with that continue, then that's a systematic risk. It's a very big risk to the economy, and then CBN might have to intervene. But like I said, the best way they could do, because globally now it's not obtainable where you see banks just go under. global best practices these days is to see how you can get in new investors into those banks to get in more liquidity. And that's why I keep saying that the recent recapitalization of banks, as directed by the CBN, will be a saving grace to some of these banks that are going through such challenges at the moment.
Now, let's talk about inflation now. With inflation at 34.6% as of November 2024, how effective do you think is the CBN's contradictory monetary policy in addressing the inflation problem? And what will you say are the risk of continuing this approach, seeing that it's a new year already?
Well, I've said it on your program before because the CBN is just not handling the foundation of the problem. So they try to deal with the symptom. So when you keep on dealing with the symptoms, it's somebody that has malaria and they give him his malaria dose and he doesn't complete it every time. Then they found it, it seems like if it's okay, then sometimes they say graduate to typhoid fever, typhoid and all that. So the foundational problem of the Nigerian inflationary challenge has to do with the exchange rate. Until that is addressed, whatever the CBN is doing is just makeup. You know, when you make up just to make it up and look beautiful, but on the inside, you know what you are going through. So that's what is happening. So until they address that FX challenge, because again, like I said, most of what we consume we borrow, and that also you could attribute to your first question during in terms of liquidity, the standard lending rate to some of these customers. They are used to importation of goods into the country for consumption. So it's said what we keep saying, that if you continue to do that, again you are causing so much. If you don't address this is the problem. And again, the challenge again is that the physical side also, what are they doing to reduce this inflationary project? Because again, they also have a role to play. Because if you are now also telling the CBN is fighting in one hand to bring down inflation to reduction of liquidity, and then the government in its turn is having bogus government officials, bogus spending. So there's so much liquidity in the system, and so that also will affect what the CBN is doing. Remember, the CBN said the current inflationary fight that they are fighting was as a result of the ways and means that were collected by the government, because a lot of those liquidity find themselves not even in the where they are supposed to be, but they added to so much liquidity in the system that is fueling the inflationary pressure. So government on its own part also have to do something to make sure that they don't spend so much. And again, budget of 13 trillion deficit already is a major challenge for the CBN. So it's a big challenge. But again, like I said, if we are able to address the FX challenge, that could reduce. But again, government also, especially from the physical side, they must look at how their spending is fueling inflation.
Okay, so the CBN raised the monetary policy rate 6 times in 2024, and all in a bid to rein in inflation and make the economy better. Now, how would you assess the impact of the CBN's consistent increase in the monetary policy rate on the economy, particularly on borrowing cost for businesses and consumers?
I think you have hit the nail on the head. the effect is on borrower and then on consumers, especially small businesses. Like I said, it's the most vibrant sector of the Nigerian economy. A lot of small businesses are out of business because they can't continue to pay that high lending. Facility outside of the CBN. Most of them now are looking at using commercial papers as one means to get cheap funds, because the CBN form seems to be very, very expensive. But how many of those smaller company can have access to commercial papers? So it's a big challenge, and that is what have really not really helped businesses, the constant hike in inflation. And because that again is not the solution to Nigerian problem of inflationary pressure. Like I said, exchange rate is one, demand and supply is other, microeconomic policy is the other, fiscal policy also for inflation. So if you are just using one tool to attack Nigerian inflation, you won't get the result, and that's why they are not getting results. Just like you say, there's multi-dimensional poverty. It seems that there's multi-dimensional ways that inflation seems to come into this country. So we need to address the root cause of it. One, exchange rate will drive that down. Then secondly, begin to look at the physical side. What are they doing to reduce expenditure and to also boost economic activities that reduce cost of doing business? Like if you bring in more power, then a lot of people will not be paying diesel, and so they will be able to plan. And if you look at a report of recent that says that most of the bigger companies in Nigeria they are not even connected to the national grid, so that also fuel their expenses. So I think by and large, the smaller business are the ones that are really suffering from this high interest rate, hawkish nature of the Central Bank of Nigeria. So they need to do something about it. Hopefully, this year we'll see a change in that strategy to be able to see smaller business grow. Because again, smaller business are the ones that are also employ over 80% of Nigerians. So once those costing goes up, then you see high unemployment. Forget about what the Nigerian Bureau of Statistics is saying that the data is saying that 1 hour every day means that you're employed, but you know that the earning ability is not there. And then you talk about consumer. Consumers are not even able to buy some of these things from all these companies any longer because they don't have the means. The ones that used to buy two, buy one, some cannot even afford it. Also, that also play to bring down those companies' bottom line and in turn make them to be redundant and some of them out of business. So CBN has to look at the peculiarity of Nigerian challenges and begin to put up monetary policy that address that rather than the textbook approach of remove liquidity in the system, hide the rate. It has not worked, and I don't say anyhow that is going to work in 2025. All what they have to do is that they need to address that foundational problem, which is the exchange rate. Once that is addressed, it will reduce almost 40% of inflation. Then you begin to deal with issues that have to do the monetary policy with the physical side, and then you begin to do with issues that have to do with cost of production. And then we will see the inflation naturally come down, especially in the area of food security. That also is also in the hands of the physical side because they need to begin to provide security so that the farmers can be able to go to farm.
Okay, speaking of foreign exchange devaluation, because you've attributed it as one of the main reasons for inflation. Now, the rising borrowings from the CBN have also been linked to banks need to purchase foreign exchange. So how do you view the relationship between CBN's monetary policies and the pressure on the naira?
Well, the pressure is always there. Likely you've seen about banks, and banks sometimes want to buy this for their customers that are also into foreign business. That is one. Then, secondly, again, I think the retail sector of the foreign exchange market is one of those sectors that are not that do not have liquidity, and so that also is affecting the exchange rate. So I don't think the CBN will I mean the policy has actually maybe helped on that. The challenge with that sector is liquidity. So how can liquidity comes in? We will have to improve oil production. So once oil production improve, then you have enough liquidity to be able to deal with that in the retail sector. We have to look for Nigeria in the diaspora. We look for foreign direct investors, foreign portfolio investors. All these are what will boost liquidity. Once liquidity is boosted in that sector, then the exchange rate will definitely come down. Because when demand is high, supply is low, definitely the rate will go up. But when supply is high, demand is low, definitely the rate will come down. So it's not rocket science. It's just that we need the solution to what you just asked is let's improve liquidity in the FX market. You will see the exchange rate come down, and that will have a positive effect on businesses.
So now, I would like to know, sir, in your opinion, Mr. Mohammed, is the current exchange rate management strategy by the CBN sustainable in the face of these liquidity pressures? And then what reforms would you say are needed to stabilize the naira?
Okay, for the current exchange rate, like I said, you can't even stop it now. It has the backing of a lot of and even the current administration have said that they've been able to attract a lot of foreign direct investment because of this floating of the naira. If you look at the result before the coming of this policy, our reserve was about 28 billion. Now we have about 41 billion. If you look at that by and by the policy, you said it has worked. But if you look at that by and by the exchange rate, then you say it has not worked. And why has it not worked in terms of the exchange rate? Is because of liquidity. Now the CBN said, look, we will not be intervening in the market like we used to intervene before now. So that also is a challenge, but they will need to score begin to look at that side of their policy. Now, what can be ways to improve it, like you said? What are the strategy? Number one, the CBN must, as a matter of intervene in the market. There's no way that the CBN will just sit down and say you will not intervene in the market. There must be intervention in the market because no central bank anywhere in the world will allow currency. There are gaps that they need to fill up, and so the CBN need to intervene. That is one way. It might not be like the standard, like the the control rate, but you intervene when you see that your exchange rate is going above what it is. And they have done it severally, because if you look at it, sometime when the rate, with time the rate went to 1,900, they intervene by supplying FX to the bureau de change that were registered with them, and in turn the bureau de change were able to meet up FX in the retail sector, which is fueling some of these challenges that we are having in terms of high exchange rate. And we saw the rate came down at a point to about 1,300 before that policy was suspended, that the bureau de change should register. So you saw the rate start going down. So those are one way that they should intervene. Secondly, it's not in their hand. There must be improvement in our oil supply so that we can earn more effects into our economy. And thirdly, one policy that I thought should have by now dropped down the exchange, but I don't know why it's not doing that, is based on the data by the CBN, 40% of the pressure on FX in Nigeria is largely driven by demand for importation of refined petroleum products. As it stands now, we have at least 3 refineries that are working. Dangote refinery is working, Port Harcourt refinery is working, and their worry just come on stream. So that should bring down the demand. And once you bring down that demand in the autonomous exchange market, you should channel the demand to the retail sector. And then the recapitalization of the bureau de change also is good. That will boost liquidity in that sector, but also will depend on the monetary, so that illicit funds will not find their way into those spaces. I think then I think by and large that is what we need to do. But for us to really address this liquidity challenge, is not in the hand of the CBN totally, it's in the hand of the physical side. We must improve security in the Niger Delta so that we can improve production in oil. Once we are able to improve production, then we will be able to earn more. And once we are able to earn more, the CBN will have more liquidity to intervene in the retail sector, and that will drive down rate.
Now, so what would you say are the likely short and medium-term impact of this liquidity squeeze and higher lending rate on economic growth in Nigeria?
We're already seeing the impact, so we'll see more of those impacts. Number one, job losses. A lot of companies will have to shut down. A lot of companies may have to leave. They will continue to leave. That could create an opportunity for Nigerian companies to take it. But again, how much liquidity? Then again, a lot of businesses, also smaller business, will shut down because they borrow to bring in this product. The earning ability of the average Nigerian to consume this product is low. We see our economy is largely driven by trade and consumption. That's how we flow our economy. So we have not gotten to the side of production. So it's trade. You trade, you bring in product, then we consume. And you can only consume when you are empowered. So once you're the empowerment, the retail side is down, then the trade side is up, then you have challenge in terms of consumption, and that will affect the bottom line of these companies, and these companies will not be able to grow, and then they will not be able to employ Nigerians. So that is the immediate short-term challenges that we'll be facing with things like this.
All right, briefly, just before I let you go, I know you've spoken about things that the CBN can do, but then, now, what steps do you think the CBN can take to balance combating inflation and supporting the real economy, especially in terms of lending to businesses and consumers?
It's a tough order for them because, again, when you look at lending is not totally in their hands. You have to know that banks are there to make money also for their customers, for their shareholders. That is one. But what they can do is, like, you look at some of these key sectors that are driving inflation. How can they directly impact those sectors? Either through the commercial bank, because it's not very, CBN have tried to intervene directly. We've seen what has happened. It has led to a lot of corruption. And so what is fueling current inflation? They say it's food inflation. So how can the CBN intervene through the commercial bank to make cost of production in terms of food inflation comes down? How can the CBN, so that's the only way the CBN can intervene. But remember again, some of these things are largely driven by cost of transportation, high energy costs. That is not in the hands of the CBN. So that's why in December, I was happy that we have seen the cost of refined petroleum product come down. Hopefully this year we'll see that come down. Those are in the hands of the physical side. They also have to improve security for farmers to be able to go to farm. Once they are able to produce, then we'll be able to consume, and that will drive down a lot of inflationary projects. For me, those are what they need to do.
Well, economist Mohammed, many thanks for lending your thoughts on the program.
My pleasure. Thank you for having me.
Well, that's it on this episode of the program. Many thanks for joining us. I'm Okpeyemi Owosheni. See you next time.